Welcome everyone in another episode of Pile Investing, where we unwrap the secrets of financially growing stronger. In today's episode, we'd be talking about how investing can change your life. Asking why someone invests probably seems like a silly question. To make more money, of course. I guess we should ask, why do you want to make more money? There are plenty of reasons to start investing. Some people want to set themselves up for a comfortable retirement. Others want to retire as soon as possible. Some people want to have the money to buy a house. Others want to be able to buy their kids a house. Investing is an incredibly important life skill for everyone. The number one reason people invest is for financial freedom. The idea of being able to do a job you're passionate about, even if it pays a little less. Or being able to take a career break to spend more time with family. People love the idea of having choices and flexibility. To do that, you need to set myself up financially, so you can invest to give your future self options. The idea of investing is to put your hard-earned money to work, to let it grow, to produce an income stream, so that eventually you don't need to rely on someone else to pay you. If you can make money from someone else making money, it's a win-win. The biggest risk is not investing. The number one reason that people don't start investing is that they worry the stock market is too risky. But when you start to understand the awesome wealth-creating power of the stock market, the biggest risk may be missing out. While saving your money in a bank or under your mattress may feel like the least risk, it may be the riskiest option for your future self. Every dollar you earn from your job offers a choice. You can spend it, you can save it, or you can invest it. The difference between the choice you made and the choice you didn't is called opportunity cost. If you are choosing to save your money rather than invest it, it may feel safe today, but there is a big opportunity cost in your future. Don't save to save to invest, and make your money work for you. Compounding. Since the creation of the first company, investing in companies has been a powerful creator of wealth for millions of people. A lot of this is due to the awesome power of compounding. You've decided that keeping your money in the bank isn't the right call. You need a way for your money to work for you, to earn interest and stay ahead of inflation. The reason investing is the right call is the awesome power of compounding. A famous quote that recognizes the power of compounding is, "Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it." Einstein isn't the only famous historical figure who understood the power of compound interest. Benjamin Franklin, one of the founding fathers of the United States, similarly understood its importance. Money makes money, and the money that money makes money. There are two types of interest: simple interest and compound interest. Simple interest is where you earn money on the money you put in at the start. For example, if you invest $100 and have a 10% interest rate, every year you get paid $10, 10% of $100. Compound interest is where you earn money on the money you put in at the start, and all interest you are paid. For example, if you invest $100 and have a 10% compound interest rate, the first year you get paid $10, same as simple interest. But you then have $110. So in the second year, you earn interest on the $110, so get paid $11. 10% of $110. In year 3, you get paid $12.10, 10% of $121, and it would keep growing from there. With compound interest, you make money on the money you earn. It is a virtuous cycle where a small investment can grow into a very large amount over a long period of time. The benefits of time. Earning a stable rate of interest over time makes compound interest an appealing option. As the returns climb year after year, the numbers become more interesting. Why invest? Consider our $100 invested at 10% as an example. Investing $100 at 10% for 5 years yields a 1.6x return, $161 total. Investing at 10% for 50 years instead of 5 can increase your wealth by more than 117 times, resulting in more than $10,000. Compounding is a key factor in the stock market's ability to generate significant wealth for investors. The goal is to produce consistent returns over time without focusing on day trading or finding the right stock. Buy and hold, set and forget. Compounding returns eliminates the need for additional actions. Here are some of our favorite quotes from history's greatest investor. When we own portions of outstanding businesses with outstanding managements, our favorite holding period is forever. All there is to investing is picking good stocks at good times and staying with them as long as they remain good companies. I never attempt to make money on the stock market. I buy on the assumption that they could close the market the next day and not reopen it for 5 years. The awesome power of compounding is why the stock market has been such an effective creator of wealth for so many investors. It's not about day trading or finding the perfect stock. It's just been about earning a consistent return over a long period of time. Buy and hold, set and forget. Thanks to the effect of compounding returns, this is all you have to do. A little request before we continue. Please don't forget to subscribe and like the video. It helps us bring more useful content for you guys. Our next strategy is stop relying on your pay for most people. Their main source of income is their salary. Investing gives you another source of income and another way to build wealth. The traditional way most people build wealth is to get a job, start saving, try to negotiate a pay rise or promotion every now and then, eventually buy a house, and hopefully retire with enough money saved and in superannuation to enjoy retirement. There's nothing wrong with this plan, we just think there is a better one. FIRE, the ultimate escape from your 9-to-5 financial independence. Retire early. It's a great aim and a goal for a lot of young people. Maybe the most extreme reason people invest is to achieve financial independence as soon as possible. This FIRE movement is growing in popularity around the world and focuses on aggressively saving as much as possible by finding ways to increase income and decrease expenses. This saved money is then invested in assets that pay a passive income and allow you to retire early. Followers of the FIRE lifestyle focus on minimizing their costs in their 20s and 30s, so they can enjoy retirement well before the usual retirement age. Importantly, the goal isn't about stopping work. It's just about not needing to work. You can focus on finding a job you like, even if it pays less, or finding a cause you're passionate about. You just don't need to take a job because of the pay. Several professionals interviewed for the podcast support the FIRE movement. Pete, a licensed financial planner based in the UK, is the managing director of Jackson's Wealth Management. We questioned him about his thoughts on the FIRE movement. It's gathering pace, but I think it's potentially one of the most important movements in recent times. I think it'll be hugely important in the next 10 years or more. Could have a massive impact on the financial health of an entire generation if it continues to gather pace. It's underrated at the moment, but I'm watching it with huge interest and excitement. Andy is the founder of Maven Advisor, a UK-based financial advisor. He shared some of his thoughts on the FIRE movement when we interviewed him. The FIRE movement is brilliant. It's quite unique. We have a movement that is peddling wisdom. It's very rare that a movement, and something new, peddles wisdom. They're usually peddling information. They're usually trying to sell things, and they're trying to overcomplicate things. This is the opposite. They're trying to demystify finance. They're trying to demystify financial life success. Chris was living your standard life. Went to university, got a degree, and found a job. Then one day, as a 22-year-old sitting in his cubicle at work, he thought, so I have to do this for 40 more years? That thought led him to aggressively save and invest, and by 37, he had enough money to retire. We interviewed Chris on a podcast, and below are some snippets from his interview. We asked him why he decided to follow the FIRE movement, to which he replied with, "It wasn't until I was in my late 20s where I sort of looked at my life and figured out that, I can't sit here and do this same job for the next 40 years. And I also don't want to go back to school to do something else or to find an entirely different job in a different field that I might enjoy more. I'd rather just save and invest and put up with the short-term pain to hopefully someday reach a point where I have enough invested money where I can live off my investments." Well, Here we will wrap up the video. I am sure this all introduction and a game plan to the term investment would help you practically in your life. If you found this video even a little helpful, be sure to subscribe to the channel and also share the video with your friends to watch them grow in life too. Goodbye.